Alright, you guys, so in the upcoming week you have the FOMC meeting that is on Wednesday. That's where Fed Powell is going to come out and probably raise rates 0.75. Normally off of that, as long as there's no surprises, you will probably see, believe it or not, a bounce on the SPY. And so what we're looking at right here is we broke the upward trend, you gapped down, you came into horizontal support, and now you're looking to see, is this possibly going to end up being a bear trap? If Fed Powell comes out and the market rallies off of this, then this will have been a bear trap, and then you would continue back up to this range, which as things develop here, it's looking weaker and weaker. Whether or not we make it back up to this 427, if we end up here at 410, or you even get just a touch of this 403 at the critical target, that's something that we'll see next week. But this could end up being a bear trap. So most of all today, I want to look ahead to see what's going to be happening with Europe, because Europe is going to end up being what determines a lot of what happens in the United States. And so it's important to understand this is called DAX. So this is the German index that would be comparable to the SPY. As far as share of the world GDP, Germany comes in fourth, okay? And over there, the European Union, what a lot of people don't consider or talk about with this crisis, or I mean, some people do, but most people I know do not think about these things, is that the European Union basically is the second largest economy in the world. So everybody thinks China is this big powerhouse, but if you combine all of the European Union together, then they would come in second, and China would be third. Okay, so that's why because Germany, you see the logic here, Germany is the biggest producer in the European Union, biggest by GDP. Okay, so then it follows that their index, the strength or weakness of it, will show us a direction for the European Union, which then is the second largest by GDP, right? So then you guys know that there is the gas crisis going on over there, and these are all those indicators, things to keep an eye on, okay? So what I want to point out for the upcoming week is, even with this Fed news, is to keep an eye on what is going on over here, just as you would any other indicator, because this is a leading indicator. This is going to be a leading indicator for Europe, and Europe is going to be a leading indicator for what happens in the U.S. And so it's important to watch that. Even if we do get some kind of a move to the upside, then depending on what happens in Europe, it could have a big effect over what happens here. So something I mentioned before, to give you a general idea of what's going on over there, this is not like a huge big deal right now, okay? So don't get it wrong. It's just something to keep an eye on, okay? So this is the spread between the German and Italian bond, okay? The closer these numbers are, the better it would be, meaning that there's higher credit risk of buying Italian bonds than German bonds. That's all that means, right? The problem is that under normal conditions, these, I guess they operate independently with their economy, kind of like states is the best way I could describe it. And so, but what Italy then does affects Germany. So Italy ran up all this debt, and they're at risk of default on so many things. And so then what happens is that just like systemic risk with banks, the same thing applies here. And this is why I think this is important, is because if Italy defaults, then the other countries, the other members of the European Union, have to make a choice. And it's like, it's a rock and a hard place choice, right? They can't just let them fall apart, too big to fail kind of idea. So they're going to have to bail them out. But at the same time, they're trying to reduce, they just printed all that money, right? So just like us, they're trying to reduce stimulus, right? So how do you bail a country out while you're trying to reduce stimulus would be something to think about. So I keep an eye on that, and I would think that it's very slow moving, but it should give you some idea. This is like not too crazy a spread, but something's up. You know, something's happening here. It doesn't look healthy, and so that's why I keep an eye on that. And then the Fed rate tool, you can see you're down to the 15%. Monday morning, Tuesday, if you see this start to inch up, then that is a bad look for the SPY. And then the last thing to pay attention to for the upcoming week is the VIX. So VIX is acting weird, definitely acting weird. This is I think the first time historically that you've seen a 5% sell off without the VIX breaking over this 28.47 range. So something's up with that. Definitely something's up with that. So what you'd be watching for though Monday morning is if this suddenly breaks out higher, right? Just like a regular old, crypto trade. But if this comes down and then breaks out higher coming into Tuesday or Wednesday during that meeting, what you would do during these meetings or running up into the meeting is you want to have, if you're actively trading, you'd have the VIX. You'd be watching this pretty closely. You'll see it'll get wild on Wednesday, and but it has been acting strange. So I don't know what's up with that. No one knows what's up with it because historically, when the market were to sell off 5% in a day like we saw, the VIX would break out over this range, and it is not doing that. So that's odd. We have the options expiration on Friday, and then so what you would watch is futures just opened here, and so you will see how this ends up. If the futures break, let's go over to this one. So yeah, I already set this up for you guys. So basically you have 1, 2, 3 touches on this wedge moving upwards. You can see here this wedge, when it broke, this circled zone, this gap can be end up being a bear trap here. And then you have Tuesday, Wednesday, things move higher. That looks reasonable to me. However, if the news is not good or there's a catalyst like over in Europe, this could just simply do something sideways into Wednesday like this, and then you might not get back above this level here, and you might just see something like that. It is not out of the question, less likely, but with current events the way they are, that's a possibility because we did break down out of the wedge, and you broke my target level, which is a very strong horizontal support, and so you got the gap and the break of the target level and the break of this. So it could be a bear trap or bear trap. Not sure. We will see how it plays out. All right, you guys, peace.